Welcome back. This is Shirley Davis, and I'm back to do another video. I want to welcome back all my subscribers and welcome to my new viewers. This is the channel where we talk about my top stocks. We also talk about crypto from time to time and creating other passive income assets. So right now I'm looking at Facebook, Facebook Meta platforms. They reported earnings yesterday, and the stock went up over 17% after hours. So basically the earnings were better than expected. They still missed Wall Street estimates, but Facebook did jump today 17%. Okay, so something I wanted to mention, right now we're in a stock market where it's basically like a yo-yo. We're up one day and then we're down the next three. So we're like up 2 days and down 3. So it's not really fun right now being a stock market. They're basically pushing, Wall Street is pushing everyone to be a long-term investor if they want to see any true gains. Something I want to share with you is you can see the Meta platforms was up 17%. But if you look back over the last month, shares of Meta were well under 10%. And if you look 6 months, shares for 30 days out, they were well over 30% down. So you're really not, if you lose 30%, but you gain 17%, you really didn't win. Okay, so that's my point. So right now, stock market is more like a casino. It's up one day and the next day it's down, and it's down a lot. So it's just pushing everybody to be an investor. Now, if you trade options, this is a great market because you can do a lot of puts and calls. On good days, you can do calls, and on bad days, you can do puts. But I just wanted to share that with you. Facebook for today was up 18%, but for the last 3 months, it's down over 30%, okay? So they're sort of forcing people to be long-term investors, buy every week or buy every month, some sort of rhythm. But overall, for Facebook to get out of the trough, it's going to take a year or two. So that's what we call long-term investing. All right, something else they're seeing is Tesla stock. Many of you may have seen Tesla stock over the last 5 days has gone down. Again, many people not that familiar with the stock market, but a lot of this has to do with Elon Musk. He is the sole owner of Tesla, and he owns a lot of shares, but he is actually putting them up for collateral to buy Twitter. So some shareholders are just saying enough and enough for the risk. Elon Musk, he's taking his $1 billion and investing it in new assets, which is Twitter. Elon Musk has talked about over the last few years, he wanted to start his own social media company. What better to just buy your own social media company? But the problem is he's taking on a lot of risk. So whether he does an equity deal or he actually sells stock, it is getting very frustrating for some shareholders. And rather than hold the shares while he goes through and buys another company or he starts a new project, some people are just saying, I want out. So again, we don't know if Elon Musk is selling shares to buy Twitter, but we do know he's going to at least have to put up his Tesla shares as equity or collateral to buy into Twitter. Okay, so we see the stock falling last 5 days over 13%. And if we look over the last month, Tesla shares are over 20%. But there is value in Tesla. We just don't know when it's going to bounce back. As I said, they had an excellent quarter. But again, Elon Musk buying Twitter is putting a lot of the Tesla value shares at risk. Okay, so just understand that a billionaire may have a billionaire net worth, but he may not be cash flowing $1 billion every day. Okay, it just means he has access in some cases to billions of dollars. Doesn't mean he has $1 billion. Okay, so Elon Musk buying Twitter is putting Tesla shares at risk, and the share price seems to be reacting. But who knows? He could decide not to buy Twitter, or he could sell his Twitter stake. Who knows? Last minute, this is a deal that will take at least 6 months to close. Okay. Now let me get to my rather regular show here. Top stocks. The Robinhood portfolio was flat today, down 1%, but pretty much you see it open at bottom, and then lunchtime it came back up, and then it went flat. So that's why I keep calling this the yo-yo stock market. We saw Apple today jump 4%. During the day, during the middle of the day, Apple was up over 4%. But by the end of the day, they closed down 2%. So after hours, after they reported, people thought, hey, this is good news. We're going into earnings call for Apple, and then the stock drops. Okay, so just be aware of that. It was an interesting day in the stock market. Again, I'm calling this yo-yo stock market. We're up and then we're down. Some of the issues that Apple complained about was supply chain issues. Let's take a look at Apple stock. During regular hours, they were up 4%, but after hours, they were down almost 4%. Okay, so that gives you a clue. Again, like I mentioned, they did earnings call, and Apple shares dip as company warns of possible $8 billion hit from supply chain issues. Again, China has shut down again, and so they don't know when they can get parts or chips or different components of the iPhone and the MacBooks. So that will cause Apple to almost lose a possible $8 billion. Okay, so that's what's going on with Apple. But again, this is not new. We saw this with many other stocks where, the day of earnings call, they were down, 5%, just like Tesla was down 5%. But then after hours, they were up 5%. So again, this is the whole yo-yo stock market. We're up one day and we're down the next, but we're down 3 out of 5 days in the stock market. It's not looking very good. Okay. Upstart Holding, that's another stock. We're down 3 days, and today we're up 5%, but that's after being down over 15%. We're up only 5%. So do the math. Again, like I talked about Facebook being down over 30% in the last 3 months, but today they were up 16%. Now, if you were going to do a rip where, you bought Facebook last week before earnings, and then it went up today 16%, and you sold, hey, that's a trader's paradise. But if you're long-term in Facebook and you've seen your stock go down over 30%, you're thinking about selling. You're not thinking always buy more, okay? Domo data service was up 4.88%. Let's see here. VGT, this is the Vanguard Technology Fund. So this is a mix of stocks. So if you just want to get in, actually it may be a great time to buy an index fund. ETF provides you a mix of technology stocks. As you can see, there's a little Apple in there. There's some Microsoft in there. There's some NVIDIA, and there's some Visa in this particular ETF. So Vanguard Information Technology, not a bad fund to own in your portfolio. Okay. So that's a little bit what you can do if you're not sure about these technology. You want some technology exposure, just buy the VGT or Vanguard Technology Fund. And in my portfolio, as you can see, my positions are changing a little bit. AMT is starting to be 3% of my portfolio. Innovative Properties is becoming 2% of my portfolio. And some of these have disappeared. Octet is moved up from 3% to 4%. Twilio has disappeared from this bunch. Apple is 4% of my portfolio, and AMD is 4% of my portfolio. So that's pretty interesting there. All right. Ford is a great stock to be in right now. It's trading at $14, and I own 122 shares. I'm just waiting for this to really take off and get back to that $20 price target before I sell some shares. Okay, finally, here we are for the day. Made a little over $142. Portfolio was up slightly, a little better than the Robinhood, up 0.32%. Not much to talk about. We had AMD up slightly, $57, 3%. We had Okta up 3%, $55. We had PayPal up 9%. Again, don't be fooled by that 9%. If we look at PayPal over the last 6 months, they're well off their highs of $200, and right now they're fighting to get back to $100. Okay, so don't be fooled by these pops. Again, if you're a long-term investor, 9% is really not that big in this grand scheme of things. If you're trading the stock, this would have been a great call today, a call on PayPal, okay, because the stock moved well over $7. In general, if you're doing calls, if the stock moves more than $1 and you're trading 100 shares, I mean, that's a nice little move. In this case, it moved $7. So you could have did $1.50 per share, a call. So anyway, PayPal was up 9%. Another tricky stock, Upstart Holdings, is well below its lows again, is up 5%. And stock that I really think everybody should own is Microsoft. Microsoft today was up 1.97%. As again mentioned, they reported earlier this week. And Apple, after the spike on the day, like if we look at Apple for the day, they did spike up. And once the day got going, they were up over, like I said, over 4%. But then as the day went on, they fell off after a not so much a bad earnings call, but so much guidance for the future that they're going to possibly lose $8 billion. Okay, so again, it's a technology earnings season. If you look at my top stocks portfolio, you'll see that Apple during the day was up 4.46. PayPal at one point was up 11%. As we mentioned, they closed at 9%. So you understand the stock market is pretty much it's like an average. So pretty much stock market does this. It goes up during the day. So it may like hit 4%, and by the end of the day, it's back down. So during the day, Apple was up here, and by the end of the day, they closed at 2%. So understand that about stock market. There's a isosceles about it where things go up and they go down. So during the day, when it's, let's say in pre-market, sometimes you have the stock market go up by 2 or by 5%. But as the day goes on, the stock usually cools off or comes down. Now, only time the stock usually goes up after hours, after 4 o'clock, is only in case that the earnings are really good. In those cases, we saw that with Facebook earlier this week, where the stock went up after hours. Okay, so that's just something to think about. Remember, when you see this 4% during the middle of the day, that's pretty much at that moment. Okay, so pretty much the stock market, all stocks go up or go down. What you see at the end of the day is just the result of all traders in and out. Okay, so just a quick tip there. And let's go back to my portfolio really quickly. We did see ConocoPhillips get closer back to that $100 mark, back up 4% today. Again, this is a dividend stock, ConocoPhillips. And as you did see earlier, NVIDIA during the day was up 7%, but as the day went on, they cooled off and closed at 4%. So that's something to study about stocks. Remember, they don't just go up straight up like an arrow. They go up on like little small peaks, and then they come back down. And sometimes they come back down a whole lot. But, like I said, this stock market was pretty decent today. As you can see, had a lot of green, and it was a mix. It was some AMD. There was some really good technology like Microsoft and Apple had decent days. But let's see if this trend continues. Like I said, it's been a yo-yo. They've been up one day and then been down the next day. And let's just see what will happen in the stock market. So again, top stock of the day was AMD, up 3.57%, cash gain of $57. And right behind it was Okta. Okta Cloud was up 3% and made me lower $55. Not much to write or talk right home about, but we did cover in the positive today in this portfolio. So again, I want to thank you for watching. Thank you for listening. Please like, share. If you'd like to get some free stock from Robinhood, please use my link below or use my Webull link below. And everybody have a great week.